That's where everybody's focused, is on the direct-to-consumer, despite what is continuation of cord cutting, but somehow, interestingly, is no longer the fear, at least amongst investors. They've done a very good job of taking the conversation elsewhere at Disney, haven't they?
Well, they have. I mean, they really pivoted to the future. As Omar Bush says in his current book, Pivot to the Future, Disney is actually executing on compiling vast content from Fox, from Disney, from Marvel, from all of them. They're really looking to how to market that to the future. And we've been saying for the last couple of years, the whole move is direct to consumer. So that's what they're betting on. They're using their best assets and moving them to the future of what they expect the world to be in 3-4 years and continuing to go that way. So I think people in the stock are really looking at momentum, the momentum that they're creating with the content and the move to
and the growth potential a few years out. But it doesn't take away from the fact that ESPN is still a very important property for them. And there are fewer and fewer subscribers as a result of cord cutting. And not all of them go to these virtual MVPDs to get ESPN there.
Absolutely. I've been saying for the last couple of years, you're going to see this momentum flag on ESPN because not all of cable subscribers are sports fans, and when they cut the cord, not all of them are going to sign up for streaming. Now, the streaming number at $4.99 a month for ESPN Plus is $3 under the $7 that ESPN is getting from cable operators today. So that is under that. And then as the people disconnect from the cable or the satellite and don't have sports, that's also going to affect their revenue stream on advertising. So I think you're going to see the price of ESPN Plus rise to 50 to 100% before 24.
They're very different services, we should point out. And I've talked to Iger about this. ESPN Plus is not trying to replace ESPN right now.
No.
There may come a day where that occurs, but it hasn't happened yet.
ESPN signed 10-year contracts with the major sports a couple years ago, so they have a long running room for their access. But do they have full access on streaming? That's another question that has to be answered.
I just have a question on expenses, because clearly they're going to have to spend to get, the Disney Plus and the new content they're working on. The direct-to-consumer division did post a loss this quarter of $393 million. So that was up from a year ago. And clearly they're working on products like The Mandalorian and new content. Do you think investors are going to give Disney the benefit of the doubt in a way that they gave Netflix, which is spending a lot more to produce original content?
Well, I think that if you have your tentpoles, and they release their tentpole schedule for the next 8 years for those big sci-fi movies. And by the way, when I launched Sci-Fi Network in '92, it was with the Star Wars trilogy. So they're doing similar pattern. It's the Star Wars, it's the Avatar, it's the science fiction that really drives an audience. And you see what Avatar did. When they were released and recent releases for them, they're using their biggest tentpoles to drive their revenue, both in their traditional market and on streaming. They've already announced that through 2027, excuse me. So, they're betting big.
Yeah, they are. And of course, well, to your point, they benefited the box office, and then people want to watch those movies over and over again, and they will end up on the Disney Plus service.
Right.
Sort of helps.
Right, and that will drive interest. Now, the question is, when you sign up for the streaming service, will you go in and out of it, or will you stay with it? Will you go in when you want to see these big tentpole things? But when you look at streaming services like Netflix, the preponderance of the viewership is really on the library product. And so Disney has very, very deep library.
Does it put pressure on Netflix over time, do you think, from a competitive position?
Of course it does. I mean, I think that these are really big properties that Disney now controls, having bought, Marvel and Pixar and all these different companies, and getting all the Fox product. It's going to put pressure on Netflix. Netflix has really been very smart about their marketing. Their database management is superior to just about everybody else out there. They've really refined it. Disney's a great marketing company, but they have to learn how to do this still. There are going to be some fits and starts with this direct-to-consumer for Disney. It's not going to be a straight up all the way, but they have laid out what they expect their costs to be for the next 5 years. The question for the, investor or the consumer, that is interested in a stock, for example, is do you believe their estimates for the cost, which are pretty substantial?
I mean, if you think about winners from this whole streaming war, look at Roku today. It's up 22% in a down market. It reported, blockbuster numbers last night, taking its gains for the last 12 months to 118%. I mean, is that who wins from all of this? Is that the best play?
I don't think there's one winner. I think there are going to be a couple winners out there that are going to do extremely well in this marketplace. I think Netflix, I think Disney, and Roku has been really interesting as a much smaller company, but with really great, reported numbers yesterday. I think Roku is used by a lot of people out there in the marketplace, so they could be one of the winners too.